We are covering these 8 top stocks with big percentage gains today. Our review on CDT. Conduit Pharmaceuticals Incorporated is a disease-agnostic life science company that's working on tackling some pretty underserved areas in medicine. Unlike traditional pharma companies that often zero in on one therapeutic category, Conduit is taking a broader approach, targeting autoimmune diseases, immunodeficient conditions, and idiopathic male infertility. That includes conditions like uveitis, preterm labor, renal transplant rejection, Hashimoto's thyroiditis, and even Graves' disease. Their lead assets include AZD1656, a glucokinase activator being explored not just for diabetes but also for its potential in thyroid-related autoimmune disorders, and AZD5904, a myeloperoxidase inhibitor that's being developed as a potential treatment for idiopathic male infertility, which is a space with very few effective therapies right now. So what sparked the sudden market interest? On Thursday, Conduit announced a $1 million share repurchase program, and that news hit like rocket fuel. The stock exploded, finishing the day up 72% with after-hours continuing the push. What's even more eye-catching is the volume, 73 million shares traded, which is a massive spike for this name. This wasn't just a quick pop and drop either. It opened the day with a 55% breakout, followed that up with another 30% surge around midday, and then tacked on an additional 30% during the after-hours session. That's a clear signal of sustained interest, likely from both retail and algo-driven traders piling in throughout the day. From an investor lens, this repurchase program might seem modest in dollar terms. $1 million isn't huge, but it sends a loud message. For a small-cap biotech that's still early in its journey, committing capital to buy back shares shows that management believes the stock is undervalued and wants to create shareholder value. That confidence can be contagious, especially when you pair it with the kind of asset pipeline Conduit's working with. Now, of course, today's rally was driven by the buyback news, but the real question is, can they follow this up with meaningful clinical progress? If Conduit can hit key milestones with AZD1656 or AZD5904 and start showing real traction in trials, this could be the start of a much bigger story. For now, the market's clearly watching and reacting. Our review on RSLS. ReShape Lifesciences Inc. is a weight loss and metabolic health solutions company that's trying to tackle obesity and metabolic disease from a lot of different angles. They've got the lap-band system, which is a less invasive alternative to gastric bypass or sleeve gastrectomy, along with other technologies like the Obalon balloon, which you actually swallow like a pill to help with weight loss, and a neuromodulation system they're testing to treat type 2 diabetes using vagus nerve stimulation. Basically, they're creating a whole suite of tools to help people manage weight and related conditions, from surgical to non-surgical options. Now here's where things got interesting this week. ReShape just dropped news that they're partnering with Motion Informatics, a tech company out of Haifa, Israel, to bring an AI-driven neurorehabilitation device to the US. It's called the Stimul-03, and it's aimed at neuromuscular rehab, so think patients recovering from strokes, spinal injuries, or other motor impairments. The device was just shown off at a major occupational therapy conference earlier this month, so it's fresh on the radar. And the market? It loved this news. Shares of RSLS surged 65% today, most of that momentum actually starting in yesterday's after-hours session. It's one of those adjacent market plays. ReShape is still all about weight loss and metabolic health, but with this move into AI-powered rehab, they're opening a new door to a broader healthcare tech audience. For a small-cap company that's had its ups and downs, this kind of partnership brings some fresh energy and potential new revenue streams, which investors clearly appreciated. It's also worth noting this deal shows ReShape's willingness to evolve and diversify. They're not just relying on existing products like Lapband or Obalon, they're branching into AI, neurotech, and rehab, which are sectors with real growth potential. So while the stock still got a long road ahead, this feels like one of those catalyst moments that could help shift the narrative in a more positive direction. Let's see if they can build on it. Our review on MRM. Medirom Healthcare Technologies Inc. is a holistic health services company based in Japan that operates a pretty unique model. They've got a network of wellness salons under the ReShape brand, offering relaxation and health management services across the country. But they're not just your typical spa chain. They also blend in digital health tools through their Lav app and Mother Tracker device, pushing into preventative healthcare with a tech twist. Their business stretches from physical relaxation salons to digital health platforms that serve corporate clients and even government programs, so it's a really interesting hybrid of wellness and digital health. Now today's stock action? It was wild, in a good way. Shares of Medirom surged 56% by the end of the session, with the first big leg of the move kicking off right after the opening bell with a 40% pop early in the day. There wasn't a specific press release or major headline driving this, which makes it feel like a pure momentum breakout, possibly tied to traders rotating into smaller cap names in the health and wellness space or speculating on upcoming news. For a microcap stock like this, big moves aren't unusual, but this kind of volume and percentage gain definitely stands out. It might also be that investors are starting to take another look at Medirom's dual model, brick-and-mortar health services plus a growing digital health platform, especially with preventative healthcare gaining more attention globally. So whether this is the start of a bigger re-rating or just a short-term squeeze, it's one of those moves that puts the name back on the radar. If Medirom follows up with any business updates or fresh partnerships, the market's already warmed up and watching closely. Our review on KTTA. Pasithea Therapeutics Corporation is a biotech company zeroed in on tackling central nervous system disorders and certain cancers through cutting-edge drug development. Their main focus right now is PS004, a MEK1/2 inhibitor aimed at conditions like neurofibromatosis type 1 and other MAPK pathway-driven cancers. They've also got two earlier-stage candidates in the pipeline, one targeting ALS and the other schizophrenia, so it's a pretty ambitious lineup for a small-cap name. Now, the stock absolutely lit up today, up 46% on massive volume, with over 100 million shares traded. And the move really got going early, with a 30% pop in pre-market trading following some solid news out of their Phase 1 trial for PAS004. The External Safety Review Committee gave the green light to advance to Cohort 6 in the dose escalation trial, and here's the key part: no dose-limiting toxicities, and no rash observed so far. That's a big deal because rash is a common and frustrating side effect with other MEK inhibitors, often forcing patients to discontinue treatment. So this kind of clean safety profile in early-stage testing? That gets attention, especially for a drug class that's known to be tricky. Investors love to see a smooth climb through dose levels without red flags. It builds confidence that PAS004 might actually be more tolerable than competitors down the road. Plus, the company mentioned strong demand for enrollment, which shows there's real momentum on the clinical side too. This is still early-phase data, so there's a long way to go, but in the world of biotech, a well-received safety update like this can be a major sentiment driver. And clearly, today's trading shows the market is taking notice. If the trend continues with efficacy signals down the line, PS004 could end up being the real backbone of Pasithea's future story. Our review on BNGO. Bionano Genomics Inc. is one of those under-the-radar names in the biotech world that's doing some really cool stuff in genomics. They're best known for their optical genome mapping tech. Basically, a high-resolution way to look at big structural changes in DNA that other tools can miss. Their main product, the Sapphire system, is used in everything from autism research to cancer studies, and they've got a full ecosystem around it, including software and diagnostic tools. So, today's 42% jump in the stock? That came after H.C. Wainwright initiated coverage with a buy rating and slapped on a $10 price target. That's a big call, and it caught attention. What really moved the needle is the reasoning behind it. Bionano's valuation is way below its industry peers, even though their core revenue has grown massively in the last few years, from around $6 million in 2020 to over $29 million in 2024. That kind of growth, paired with a rock-solid product in a hot area like genome analysis, is hard to ignore. The analyst basically said, "This company's doing everything right, and Wall Street hasn't caught up yet." That's the kind of narrative that gets investors excited, especially when you're talking about a company that's been restructuring to focus more on profitability and scaling. And the tech itself? It's not just flashy. It's actually outperforming some of the traditional genome analysis methods. That's why researchers and clinicians are starting to lean into it more. Today's move feels like the start of a re-rating, where investors are finally realizing Bionano might be way undervalued for the potential it brings. It's early, sure, but if the momentum sticks and the fundamentals keep tracking up, this could be one of those names people look back on and say, "Yeah, we should have seen it coming." Our review on SKYQ. SKYQ Incorporated is one of those interesting plays in the energy and environmental tech space. They're not just about oil, they're trying to flip the script by turning waste into resources. The company's got a 5,000 barrel day production capacity, a refinery in Nevada, and a unique proprietary process that recycles waste asphalt shingles and even oil-saturated soil. So they're doing traditional energy with a pretty strong sustainability twist. Now, the stock popped 33% today, which is a big move, especially on relatively light volume, just over 300K shares. What's driving it? The company just announced a non-binding letter of intent with Southwind RS. These guys are big in the asphalt shingle recycling game, and they've got 9 facilities in the Chicago area. The two companies are teaming up to explore a collaboration that could put SKYQ's tech to work across all those locations. And here's why that matters. This LOI could be the starting point for SKYQ to scale its model beyond just Utah and Nevada. They're talking about potentially rolling out a modular approach to recycling, which means they're thinking big, replicable systems that can plug into other markets. That's exactly the kind of narrative investors look for in a small-cap growth story: early traction, proven tech, and now the beginnings of a broader rollout. The market is definitely reacting to the expansion angle here. Even though it's just an LOI, not a done deal, it signals real interest and industry validation. Partnering with a well-established player like Southwind gives SKYQ more legitimacy and could speed up adoption if this collaboration turns into a formal agreement down the line. So, today's move feels like a classic speculative bounce on big potential. If this thing evolves into something concrete, investors could start thinking about a longer-term growth path here, not just in Illinois but nationwide. Our review on STSS. Sharps Technology Incorporated has been making a lot of noise today, with the stock jumping 30%, and it's no small move when you consider that the company's market cap is just $298,000. Trading volume was through the roof with 1.63 billion shares changing hands, which is a massive spike for a company of this size. A lot of the gains came in the early hours, especially with a big 55% pop at pre-market open and then another 50% breakout before the market even opened for regular hours. So, what's going on here? Sharps is in the medical device game, specializing in smart safety syringes. Their products, like the Securguard, Soliguard, and Sharps Prevensa, are designed to address critical issues in healthcare, like needle stick injuries, wasted medicine, and syringe reuse. It's all about safety and efficiency, and with their patented technology, they're offering solutions that could have a real impact in hospitals and clinics around the world. Now, what caused today's surge? It's hard to pinpoint exactly, but it's possible that investors are reacting to some recent news or just speculating on potential partnerships or growth, especially as the company continues to scale its manufacturing operations. They've got a facility in Hungary and are looking to expand in the US, which could be a key factor in driving more visibility and ultimately more sales. The stock's volatility is clear. While it shot up in the morning, it's since faded a bit into after hours. This is typical with these kinds of moves, where early excitement gets tempered by profit-taking or a realization that things are still in the early stages. For investors, it's a bit of a wild ride. But if Sharps can make good on its growth plans and capitalize on the expanding demand for safety syringes, it could be one to watch moving forward. So, whether this is a flash in the pan or the start of something more substantial depends on how Sharps executes over the coming months. If you're following this one, stay tuned for any news that might provide clearer insight into their expansion plans or product uptake in the market. Our review on AREB. American Rebel Holdings Incorporated has certainly been a roller coaster ride today, with the stock soaring nearly 30% on some significant moves. The company, which designs and markets branded safes and personal security products, has been catching a lot of eyes lately. If you're not familiar, they offer a range of products, from gun safes to apparel with concealed carry options, all under their American Rebel brand. Their products are designed for security, whether that's keeping firearms safe or storing keepsakes and personal treasures. So, what's causing all this excitement in the market today? Well, there's been some major insider activity that's got investors buzzing. HRT Financial LP, a significant shareholder, made some bold moves, purchasing over 230,000 shares for nearly $2.8 million and selling a chunk of shares worth a little over $2.4 million. These kinds of transactions tend to spark a lot of interest, especially when they come from institutional investors, signaling confidence in the company's future. But that's not all. There's also been some volatility in the stock today, with multiple trading halts due to the sharp movements. The stock saw a huge breakout right at market open, up 90%, before settling down a bit. There was another 25% jump midday, but by the time after hours rolled around, the stock had faded a bit from its highs. This type of volatility is typical when a company is in the middle of some exciting developments, like the private placement of stock and warrants worth up to $11 million, which is likely aimed at fueling future growth initiatives. With all these developments happening in such a short amount of time, it's clear that investors are watching closely to see where American Rebel goes from here. If they can execute on their plans and capitalize on their recent milestones, the stock could have some solid upside potential. But, as always with these types of volatile moves, it's important to stay cautious and keep an eye on the next steps for the company. Please subscribe, give the video a like, and watch more from our playlist. Thanks.